What's going on, everybody? Welcome back to the channel. Today we have a viewer requested video. This is HIMS, ticker symbol HIMS, HIMS and Hers Health Incorporated. We're going to take a look at charts to see if we can find some support and resistances, potentially some patterns. If you can't see what I'm seeing now, but you'll see it in a second. We'll look for patterns. We'll look and see what institutions and hedge funds are doing. We'll run the proprietary projected stock price calculation and so much more. So without further ado, let's go ahead and hit the subscribe button and jump on in. If you're already subscribed, thank you so much. Consider hitting the like button or leaving me a comment. Tell me your favorite color or something you like about this stock, or even a stock you want me to look into. Honestly, any type of engagement, you could even thumbs down me. Any type of engagement is good for YouTube to use and determine if my content is good enough to expand the algorithm. So far, it's not. I'm getting about the same 100 views a video, which is totally fine with me. I'm more so doing this for myself. I love doing this kind of stuff. I've been doing it for almost 10 years now. So anyway, let's stop talking about that. HIMS. So looking at the bigger picture, this looks like a perfect candidate for the cup and handle within a cup and handle within a cup and handle. We've seen it go over 1,000% in under 2 years. For example, May 2022, the stock was as low as 272, and now May 2024 got as high as 2144. But I mean, as of today, we're at 30 bucks. So 1,000% over 2 years and a handful of months, which is fantastic. Looking at our indicators, it's with the bulls at the moment, so the momentum is continuing to go upward. We need something pretty damaging for the stock to go down in the middle of this current rally. We can see the RSI is at 70. That is the relative strength index. MACD momentum month over month, just crushing it still. Money flow appears to be at an all-time high or getting there. Again, we'll see what institutions and hedge funds are doing up to the date. So if we are seeing large outflows, people or institutions, hedge funds selling, taking those profits, we'll see that. And our relative momentum indicator is pretty hot. So potentially maybe this could have been our all-time high, a double top at $35. But again, we'll let this other stuff that we're going to look at decide. So aside from the chart, we have a cup and handle within a cup and handle within a cup and handle. So our first cup and handle is going to be right here. And we like to look at the picture and whittle our way down. So the monthly is my preferred time frame. However, I do like the weekly as well to reiterate and solidify patterns that I'm potentially seeing. And so again, we have our first cup and handle here. That's number one. Second cup and handle right here, left side of the cup, right side of the cup, handle. Third cup and handle, left side of the cup, right side of the cup. In all three instances, we need and we want the right side of the cup to be higher than the left side of the cup. So right here, we got as high as 25, well, high was 25.40, high right here, 25.74. Again, right here, our high was 15.55. This one was 17.16. So again, the right side of the cup, always higher. We always want that. And we're seeing that again right here. We now have this huge cup, left side of the cup, right side of the cup. We should see a pullback here, in my opinion. However, the momentum and the trend of this stock is just skyrocketing. But just really rough and dirty. Depending on how long the stock can stay at these $30 levels, we should see it probably come back to $25, in my opinion. So I do believe HIMS will come back down to $25, and that will be a healthy pullback. That will retest almost our double top here. It'll retest, potentially slip under and do like a U consolidation here, which is a throwback, which is totally acceptable, totally fine, totally normal. No red flags there. So 3 cup and handles within one larger cup and handle. That was apparent on Digital Turbine when I went from $1 to 100. Renasola Enphase back when it was $1, AMD when it was $2. So don't sleep on the stocks that are under $5 is what I'm saying, because we get into the situations where now from $2.70 to $30. So anyway, back down to here. Before I jump into this timeout, one of the users did say that I should have the slide open for the presentation as I'm talking through my stuff. But however, not all websites are going to have the latest presentations. So if you are someone who likes to look at the data that I research, go ahead and do it. But in this particular scenario, it's not going to work. And I don't know if it'll work in the future, but we'll check it out for our next video, Urban Outfitters, coming out in a couple days. So anyway, any red flags that you see here, I'll just give you a second. Cheers, coffee. Okay, red flags that I see, honestly, I don't see any besides the price to earnings, but I think that might be justified because let's just take a step back. Let's just step back before we even look at these numbers. 2020, they did 148 million. 2022, they did 271 million. These are sales. 2022, 526 million. 2023, 872 million. 2024 trailing 12 months, 1.24 billion with a B. So we don't have 2024 down here. However, we do know it's going to be a freaking monster candle right next to this. Our EPS is doing a Nike swoosh going like this up and to the right. That's just absolutely beautiful always. So this is just a beautiful looking company at the moment. It is a little overvalued. A lot of shorts are piling in at the moment. So we'll calculate out. Very good quick ratio, not much debt at all. Sales past 5 years, that shows resiliency through COVID. That's fantastic. EPS past 5 years, glad they're not showing it because it'd probably be negative, but sales, good. Gross margin, 70%. Every $100 they spend, they're getting back $70.63. That is beautiful. They are profitable. A lot of shares outstanding. However, as we can see, the trend is your friend until the end. And if you get enough volume, look at this volume right here. Enough volume, whether it's a Chinese penny stock that gets pumped and dumped because people are collaborating on it and buy in and then sell at the top. It's a similar scenario where you got a stock. This is not a penny stock. This is a normal stock. Highly undervalued. Investors could see that they were crushing 2024. Guidance was there. Volume comes in. You can't really stop that. So it works on the way down as well. Look at Celsius, the energy drink. Ticker symbol CELH went from $90 now down to like 30. Again, they've been killing it, crushing it. Just fantastic numbers across the board. The trend is your friend until the end, and they were able to bring that all the way down to $30. Not sure where it's at now, but that's a pretty good one. I should probably add to my list. Okay, and then our shares outstanding. We don't really like the shares added to the float. However, 2023, 213 million, 2024, 209 million. So there is some natural and organic accumulation. After we do see this run, if it is going to stop, if it does come down, we should see the outstanding shares climb back up to probably 213 or higher because restricted shares from big owners, big institutions, hedge funds, etc., they will release back into the market if they do sell. So overall, this is just looking spooktacular. We're going to go ahead and run my proprietary numbers. This was made for companies that have an under $1 billion market cap, but it also works if it is over a market cap of 1 billion. We just have to include it in this market cap portion if it is over 1 billion. In this case, it is 6,540,000,000. Good for them. Income, they're profitable, 101,260,000. And they do 1,240,000,000 in sales. Good for them. And again, their quick ratio and their debt, this is just going to be gorgeous. Really quickly, gross margin, 70, 80, 76, 73. Gross margin is just absolutely beautiful across the board. Market cap freaking tripled from 1.8 bill to 6.5 billion. Crazy. Revenue, just we saw that up there. Gross profit, just beautiful. All right. Cash, they do have 220,980,000. Debt, not that much. Yeah, 8,670,000. Again, not that much at all. Assets 441 million, liabilities 97. Assets dwarf liabilities about by 300 million, 3 to 1, which is good. Almost 4 to 1. Um, a lot of these are not red flags. This is typically you'll see like a sell of 2,000, you get options of 2,000, etc. So there's no real red flags. Manuel Anja purchased at $26. We would love to have seen purchases around $2, like major purchases, but again, we can just see a lot of selling. It's fine. Honestly, no real red flags. Back to our calculation. All right, we're gonna take this and divide it by 209,440,000. So we're getting a potential stock price of $38.64. Did we get there? No, we got to 35. Say come again, 38.64. Um, yeah. I personally actually let's look at the calculated cup and handle price target because that's going to give us a pretty good answer as well. So what we have to do is we don't do this calculation often, so I'm fine just having it in calculator form. So we have the left side of our cup being here and our right side of our cup being there, which is we'll just call it 2551. We'll call it 2550 to be fair. So we take our cup height, 2550, minus our cup low, which is $2.72. And we take this and we add it to our cup height of 2550. So we get a price target of 30 or 48.28. So between the 38 and the 48, I think is okay. With this candle here, I would be a little bit cautious. It could take several more months for this cup and handle to play out. As you can see, it took from our left cup to our right cup. It took several years. And then from the high of the cup to the throwback was 1, 2, 3, 4. It took about 5 months to come back to even. So again, it could take some time. And the company is projecting 11% next year. Again, if you set the bar low and you beat it, you look amazing. No shame in that, honestly. So this looks good. 38 to 48, I'd say was the price target. If you're looking for a good area to get in, before we do jump into our advanced charting, let's just see what institutions and hedge funds are doing. So old data shows that institutions own 55.67%. New data shows that they own 70.97. So that is about a 14%, 55 to 70, about a 14 point something percent increase. We are seeing all-time high institutional ownership, which is fantastic. Vanguard owns 18 million shares. BlackRock 29 million shares. Andrew Didham, he sold 8%. Institution Venture Management sold 41% earlier this year. They totally missed out. And Jack Abrams sold 21%. He missed out as well. Wow. So again, all-time high institutional and hedge fund ownership. You can go to the same website, fintel.io/SO/US/ the ticker symbol HIMS. You can also do this for Tesla, TSLA, or Apple, AAPL, etc. So you can go down here and look. Yeah, JP Morgan. So that is what we're looking at in terms of institutional ownership. Looks like institutions have been adding overall. So now let's move on to our advanced charting. Okay, we're gonna do a couple things. I like that. So I'm trying to, ooh, I like it right there too. Okay. Just looking at different channels at the moment. So if I had to say wait on this stock for an immediate bounce, we're looking at $25.44. Watch how it reacts there. If it falls back into this channel, sit and watch. Again, let's continue on with our channels. That's nice. So I would just be waiting here. We're also kind of developing an ascending triangle, which is usually bearish, but it turns bullish after you get your throwback. So let me just show you as an example. This is a very steep. That's pretty steep. That's probably too steep. There, well, it's gonna be. So the ascending triangle is going to look like this. It's essentially, again, a bearish pattern. And what we like to see, or what we typically see, is a throwback of the candle that falls through. It falls through, but then it continues its uptrend. It's usually a capitulation event where paper hands or people who don't have strong conviction or are emotional traders, you could see it dip down to maybe $20 and then it starts to rip higher. So definitely considering waiting here. However, it is mid-December at this time. This video is coming out December 23rd, right before Christmas. What we want to see HIMS, if this candle closes the month of December around 33, $35, it's going to show that there's a lot of demand right in this area. You guys can see. So a lot of demand, which means this could be a very bullish situation where the stock, again, we see another rocket month ahead. Also wanted to just call this out. This is actually pretty important and very relevant. Last month, November, there was 522 million shares traded. We are halfway through December and we're only at 127 million shares traded. So we are far less than half. So we, again, waiting on the sidelines. There is nothing wrong with that. There are thousands of other stocks in the stock market that are potentially worth getting into now as they are getting into this, excuse me, throwback situation where I've been consolidating, etc. So if you feel like you missed the move, there's a lot more companies to be potentially interested in. If you do want to get into HIMS without getting into one stock volatility, you can get into the Russell, the RUT, and let me just confirm. That's not it. We're going to go to screener. So getting into an index fund like this S&P 500, you got 500 stocks. The Russell, I think, is 2,000. We're going to find out. Index, the Russell 2000, yeah. So there's only 1,950 stocks. I thought it was going to be 2,000. And again, the ticker was HIMS. So let's just confirm that it's in here. Let's go to page 20. So if you buy the Russell, you're getting 1,950 stocks compared to just one stock. And then let's see what the Russell 2000. Whoops, year 2F. What the heck? Okay, so year to date, the Russell has performed, I'm going to guess very well. 16%, not bad. So again, you're getting 1,900 stocks compared to just one HIM stock. And the purpose of that is to guard yourself from volatility. If HIMS falls 15, 20% in one day, you normally wouldn't see that with the Russell 2000, for example. So I'm just going through the Russell 2000 to confirm that HIMS, ticker symbol HIMS, is in here. And it is right here, number 806. So again, if you're buying the Russell 2000, you have a little bit more um, peace of mind. You have a little bit more peace of mind. Sorry about that. So we're about 18 minutes in. Overall, this is a very strong company. They are doing very, 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 very well. Again, it's over 1,000% in a year and 6 months, roughly. So I would definitely wait on the sideline for this. Year to date, it's up 237%. So I think letting it cool down is a fine move, honestly. So anyway, and then so we looked at the upside 38 to 48, and then our potential bear targets 25 and $20. So thank you so much for watching. If you made it this far, I like you a lot. Have a wonderful Christmas Eve, and I will see you on Christmas.